Rates are increasing into the mid sevens and many believe they are marching towards 8%. What does that mean to you and what do we think the buying opportunities are at this point? But before we jump into that, make sure you hit subscribe below to stay on top of all of the latest Huntsville, Alabama real estate news. Just as buyers seem to be becoming accustomed to this higher interest rate environment, transitioning from just a little over a year ago where we're in the high 2s and low 3s, to the high 6s and low 7s, the market really seemed to be settling out. And a lot of economists were predicting that we were hitting an inflection point and we had really bottomed out in terms of real estate, either depreciating in some markets, kind of staying flat in others, and then kind of these modest increase in a lot of the markets. And a lot of economists predicted the rest of this year and into 24, we're going to kind of see that inflection point off of July and seeing prices and home sales increase. And just as that happened, interest rates started to creep back up again as the Fed continued to raise interest rates, and things in the economy caused the 10-year Treasury bond, which really reflects the 30-year mortgage rate that we have. It caused these rates to start to go up again. So we're starting to see mid 7s, and many economists, many people are now predicting that we're marching all the way up to an 8% rate. Again, as we see these interest rates march up now into the mid 7s, up to potentially 8% range, I think 8% is going to be really a key psychological number. It took the market a while to adjust to 6% and then 7%. I think it's going to take the market a while to adjust again to 8%. And as we head not only into potentially 8% rates, and also kind of a slower season as Q3 wraps up going into Q4, I think this is actually could be the straw that starts to not break the camel's back, but start to see a little bit of weakness in terms of pricing in residential real estate sales. So I think this Q4 is going to be a unique buying opportunity for a lot of buyers. And I think sellers are really going to have to begin to negotiate if they're wanting to get their homes sold during this time in the marketplace. And so I think this is good news for buyers. In one sense, it's bad news from interest rates, but from a price standpoint, for those that can kind of play the interest rate game, kind of the marry your home, date the rate theme. For buyers that can do that, or buyers that are paying cash, I think they're going to be rewarded in Q4 in terms of lower prices. And I'm already starting to see new construction builders really get aggressive on their pricing and their promotions to get rid of their inventory by the end of the year. So I think this is a unique window of opportunity in Q4 to take advantage of the market. So I think this is a unique window of opportunity in time for a couple of reasons. Number one is I think the Fed is playing this game of cat and mouse. The Fed has come out and said, we're not afraid to continue to raise interest rates if needed. Now, they didn't say they're going to continue to raise interest rates. They're actually even pausing potentially interest rate increases, what a lot of people are predicting kind of moving forward into the next Fed meeting. And so they're kind of trying to bluff the market, in my opinion, because they know as interest rates start to come back down, especially in like the mid 5s, maybe even 6% range, there's so many would-be buyers sitting on the sidelines that will come off. And simply there won't be enough supply out there to meet that new demand. And so what will that do? Likely continue to drive inflation back up. So they're trying to scare the marketplace into thinking, hey, we may raise interest rates again. And that is basically creating this fear and uncertainty baked into the 30-year mortgage rate. So again, the 30-year mortgage rate is typically kind of loosely tied to the 10-year Treasury rate. And it's typically, about 2% or so above that, but we're sitting well above 3%, almost 4%, like 3.5% above the Treasury rate right now. And so there's over a percentage point baked in to this fear and uncertainty what the Fed's going to do. And once the market realizes that the Fed is done in terms of cutting rates, you could see almost overnight interest rates drop potentially a point or more, which again could fuel that inflation, which is why the Fed's probably playing this cat and mouse game. Now, the second thing why I think this might be a unique window of opportunity for Q4, maybe even into early Q1, is 2024 is election year. I just can't imagine politicians sitting back and allowing us to have high interest rates in election year when they're trying to get reelected. Now, the Fed obviously isn't owned by the government, but there are definitely ties there and there's pressure that can be put there. So I don't foresee 8% rates if we hit that point staying there long. So again, I think this Q4 is a great, unique opportunity for those that can play the interest rate game, marry the home, date the rate, or pay cash, or pull money out of 401k or something like that where the stock market's not doing well. I think this is that opportunity to buy that forever home, or buy some investments as well. So we have this unique opportunity for buyers. It is a challenge because they are paying higher interest rates, and since they're paying higher interest rates, they are going to expect more from sellers right now. And so if you're a seller, especially going into that Q4 slower season, and you've got to sell your home, the advice that I have is you're going to need to really get strong on your pricing, potentially your incentives like builders are with interest rate buy downs, to get your home sold in this market in this season.